I want to understand with you, there is a thought in the market about your bank, which has seen phenomenal decades of 20% plus compounding. And now the numbers show that at least the business growth on the top line front is kind of hovering around the 18% kind of a number. Whereas your NIM growth is very healthy 24% and many other parameters are upwards of 20%. So are we now seeing some moderation, and for foreseeable future, that's the new normal we are talking about?
See, if you go back, you have to go back in history to see what is the kind of rate of growth that we have experienced. You can look at any block of a 3 years or a 5-year blocks, right? A year or a quarter wouldn't tell you a trend, but if you look for a longer period, say 2012 to 17 as a 5-year block, 2.3, 2.4 times, essentially high teens to 20. That's the rate of growth, right? Assets or deposits. So you go back to 17 to 22, another block of 5 years, say 2.3, 2.4 times, 18, 20%. Or if you look at a recent time period of a year or so, this is a similar type of a 19, 20% type of growth. So that's the kind of, the velocity at which we are moving currently is faster than the velocity at which we were moving when we were 7 years, 8 years ago. So the larger we have got, the faster our velocity is. So
you will say that the best way to analyze the growth and velocity is actually look at a 5-year picture, not a yearly picture. Perhaps they will mask a lot of growth there.
Yearly is important, but over a longer period is where you deliver a change, deliver the difference.
Okay. So before I come on the retail part of the loan book, I want to understand how is the corporate end of the loan book behaving in terms of their behavior towards fresh credit, be it your SME kind of book, rural book, and of course the corporates. Because the fact of the matter is that rates in the system have edged higher, and from now also it likely to edge higher. So what kind of conversations are you having?
See, the larger the corporates, they come with the rate view, because professionally managed money managers who are there in the corporates, so they have quite a view of where the market is heading, the rates are heading, and so there's intense discussions that will happen in terms of the credit. But working capital is something, as I said, is inevitable and people have to finance. And from a project financing, it takes time, over a period of a longer term it comes. But good demand on that front, and people, it is not as interest rate sensitive from a working capital credit offtake, because ability to pass on is important, and that happens at both the SME level as well as on the wholesale level. People are able to pass it on. So that's, and then when they pass it on, does it impact the consumer spending at the end? It is reflected in the price of the goods and services at the end. Is it reflected there? It is. Does it matter? Does it matter to the overall economic growth? It doesn't. India is a high interest rate country for most part, right? Operating at a 6% to 8% kind of an interest rate is not something that is new in the country. Over a longer period of time, that's something we have seen that. And over this kind of period during those interest rate regime, the growth rate has also been very robust.
Sure.
And so that's part of how the economy has been functioning very well.
You have a very large part of your loan book now on the semi-urban and rural side as well. And there's again and again this argument coming on the table that there's a K-shaped recovery in the economy. Perhaps the lower end, inflation and higher rates both have been pressurizing the lower end of the customer or consumer. What are your thoughts on rural and semi-urban smaller ticket?
See, it is absolutely right that the K-shaped recovery is something that is visible and one sees that. But our banking customer target segment is above certain customer segment level. So we are not experiencing directly that particular segment which is impacted. It is true that inflation, disposable incomes are less at the lower levels. So that is part of the impact which is there. And coming out of the COVID, the most impacted customer segment from COVID was that segment, where the jobs were less, or daily earners or the weekly earners, so the impacted people who are there. So now coming out of that, whereas even in the semi-urban and rural that you alluded to, where 60% of the country is, our target segment is not all of that 60% of that rural India which is there. We are interested in the top 20-30% of that 60%.
Okay.
That is our target segment, which means the top end of that segment in the rural, semi-urban and rural, where they continue to have good disposable incomes and cash flows.